Hey guys, so in today's video I wanted to talk to you about this ICT order block trading strategy which helped me secure a $2,800 gain on my account, which equates to a 2.5% gain on the account for the week. Now, not only did I take this trade, but also the members in the Discord were also sent this AU sell limit entry. Of course, you can see that they closed that at break even, but I did not. So let's go straight into breaking down the strategy so that you guys can understand exactly what it is that I'm talking about. So the first thing that we have to do when trying to understand what an order block is realize that an order block is an area in the market where a lot of orders have been stacked. So price naturally will have to come back to these areas in order to close these positions. So if we take a look at an area like this, you can see that there was a load of orders that were set right here. Price moved away rapidly and then came back to close out the orders that were up here before continuing its move. So order blocks are something we can use in our trading strategy along with a few other confluences in order to mark up a very high quality trade. So the first thing that we do is we identify our higher time frame areas of interest so that we can then actually go down to the lower time frame and look for entries. Now, the first thing I did when I came over onto my chart is I started to realize that we are bearish, right? We've got a lower low, a lower high, and now we're stuck inside of this complex trading range. So our actual structure points is this lower high right here and this lower low right here. So now we're stuck inside of this complex trading range, which means that we don't have a clear bias of where price is going. However, we know that we are bearish overall. So the next thing we do is drop down one more time frame. So now in this case, we're dropping down to the 1 hour so that we can actually identify where we're trying to look. So as I drew this on earlier on the 4 hour, you can see that this was an area where price came to, broke structure to the downside. So we know that this area caused this big impulsive move to the downside, which means there must be something in here which has caused price to move away at such a rapid pace. So if we drop down to the 1 hour, we can also see that we had this news candle which caused a big spike, but it also left an inside bar right here. So this inside bar is quite interesting because this is where price didn't do anything but consolidate. Then we had this big push to the downside. We can also see that we have this big push green candle before we had all of this consolidation and a rapid move to the downside, which means there must be something in here that price is actually looking to come back to. So if we remove this 4 hour zone, we can see that we have in fact this 1 hour zone with an inside bar right here. So this shows us that this is a high confluence area where price can return to in order for us to take an entry. So if I do price on replay mode, we can actually start playing it as if I was looking at this with fresh eyes. So as we can see, let's refine this zone on the 15-minute because there was a lot of consolidation right here before a massive push to the downside. So if we were to get inside of this zone, we know that that is very high confluence. However, the one thing we have to remember is that the 4 hour doesn't have to respect the 15-minute. The 1 hour doesn't have to respect the 15-minute. However, the 15-minute does have to respect the 1 hour because 1 hour is greater than 15. So we've got an hour zone marked out and we've got a 15-minute zone marked out. So now all we simply do is we wait for price to actually come to us and then we look for an entry. But the one thing I always say is the first push that we get into any zone is usually going to be used as liquidity for price to push further up, right? Just try and remember that in all of your trades moving forward. The first push that we get into any area of interest is most likely going to be the zone that is going to get used as liquidity in order for price to take it out before giving us the actual move. So if we drop down to the 1 minute, we can see that as soon as we got this tap, price moved away in this corrective fashion straight from this zone. Now that shows us that because it's the first tap and price has moved so correctively, that this isn't the actual move, right? Because price has moved away so corrective, there wasn't any impulsive moves. So what do? We wait. We wait for price to definitely come back, there we go. We wait for price to come back and take out this high, giving us the actual move right here. Now that we've got our second push into the zone, I also don't like taking entries from the second zone. Now, the second push, we will probably see this also get liquidated because that's not where the real move still lies. So now, again, we wait. And there we go. Price has now swept this high too, giving us a third push into this zone. This means we had our first push into the zone, which I will make it clearer to see like this. So we had our first push, second push, and our third push. This means that we can now actually start looking for a market structure shift in order to identify a high quality trade. Now, whilst looking for a high quality trade, we also have to be very aware of every news event that's currently happening around us, because we don't want to get caught up in between multiple different news events, because as we're all aware, news is very erratic and can move against you or in your favor very quickly, liquidating your positions very, very quickly. So I personally like to use fastball.com for all of my trading analysis. And the reason why I like to use fastball.com is because their economical calendar is actually super, super clean, because their user interface is just amazing, right? As you can see, it gives you all of the news events that are coming out today with a star system next to it so that you can see whether it's a low impact news, a medium impact news, or a high impact news event. And what I also like to do is I like to come up here and I like to make sure that what I've got is from here, I like to make sure that I've clicked this off. So now all I'm going to see is high impact news. So now, as you can see today, there was so much high impact news that was happening. I didn't want to take any chances with any of my trades. As you can see at 7 p.m, we've got FOMC statements, we've got interest rates, we've got all of this coming. At 3:30, we had all of this crude stocks, we had the weekly gasoline stocks. All of this causes price to move very erratic. So because of this, I had to make sure that I used fastball.com in order to make sure when the news was coming out so that my analysis could also counter that in. And if I am in any trades, I make sure that I break even or I get out of the trade before the news event occurs to make sure that I don't get caught in between these news events happening. Now, another reason why I love fastball.com so much is because not only do they have the website, but they also have a downloadable app. So that if you are somebody who's constantly on the move and you are trading off of your phone, you can have the app downloaded on your phone. And that way you can take the news with you on the go without having to go onto the internet. Now, this is amazing because I am somebody who likes to travel quite often. So it comes in handy quite often. And aside from all of this, they have things such as analysis, where you can get analysis from institutions and other analysts that they have on board, AI signals, if you're somebody who likes to take signals from AI, and a whole bunch of other things that you can check out for yourselves, because I will be leaving a link in the description below. So make sure that you check out fastball.com so that you can get your news analysis on point. Now, let's get back to the trade at hand. So we've now got our third push into this zone. So now what we're waiting for is a market structure shift. And as you can see, we've got our market structure shift right there. And now from here, what I did is I sent a trade into the group where I had this fair value gap marked up like this. And what I did is I put a sell limit right here. And the reason why I put a sell limit right here is because, as we can see, price gave us the third push into the zone. We had a market structure shift. So we went from a higher high, higher low, higher high, higher low, failure to create another higher high, and a break to the downside, giving us a lower low. So now we want to see a lower high and then a lower low. Right, so that's the market structure shift that I was looking for. I put my entry at the fair value gap right here. I put my stops just above this high because we know that now that we've got this market structure shift, this high is now protected. And then what I did is I actually went up to the 15 minute and I thought, where should I target? Now, as you can see on the intraday, we are bullish because what do we have here? We have a higher high, a higher low, and a higher high. So now on the intraday, we should see a higher low before a continuation higher high, right? So where do you think price can go to in order to target a higher low? Well, as we can see right here, we've got this bearish candle before this momentum that broke structure and an inside bar where we had a lot of consolidation. So on the lower time frame, what we would see if we zoomed in here is we would see consolidation like this, and then a push to the upside, an entry, and then a massive push. So this schematic would actually be played out on the lower time frames right here. So that just shows us that we've got a high confluence area where price can come down to before taking off the opposite way. So what I did is I set my targets right there because I thought, you know what, let me be safe because we do have a lot of news incoming, so that way I'll take my profits and I will walk away. So now that I've got my entry, stop loss, and take profit all set, all we do now is simply wait. Price taps us in, comes back, does its thing, and then eventually plummets straight down to the take profit, and bang, there we go. So this trade has literally just closed out, and as you can see, we are currently right now in the live markets, and as you can see, price is still inside of this 15-minute zone. However, the trade played out beautifully. We had the 3 pushes into the zone. We had a market structure shift that left a fair value gap, consolidation right above with a nice order block. Price came back, gave us a tap, and then a nice run to the take profit. So again, as you can see, I did send this in the Discord as a sell limit. However, I did tell everyone to go break even really early, and the reason for that is because I just wanted the members in the Discord to be safe, and also we did have a lot of news, or we do have a lot of news, so I didn't want to take any chances. However, I left the order running on my own account, and as we can see, I bared the fruits. So I hope you took something away from this and kind of got an understanding of how to analyze areas of interest where price can come down to, and where we can play both sides of the market, even though on a higher time frame we're currently inside of this complex structure. We know we're bearish, but on the lower time frame we can start marking out these areas of high influence where we can start to trade high quality trade setups because we know that they're going to play off well. So I hope you took something away from this. I hope you understood what I mean by the 3 pushes and making sure that we understand lower time frame and higher time frame biases. So if you did, please don't forget to leave a like, comment, and subscribe, and I'll catch you guys in the next video. Take care.